Good morning, good afternoon, and good evening whenever you are watching or listening to this, and welcome to Link Up Leaders, your direct link to leaders in supply chain and e-commerce. My name is Lisa Kinski. I'm your producer and co-host, and joined as always by Francois Jeffrey. Francois, how are you today?
I'm doing great, super excited and thrilled to what we're talking about today. I told Kate actually what the topic was.
Oh, really?
That's how excited I was. And she said it was perfectly fitting for me because warranties are one thing that I am a stickler for. It's one thing that I will pay the extra. Everything except for travel insurance, I will typically buy the warranty.
That's very on brand for you. Yes.
So I'm super excited to talk to who we have today.
I am too. But before we jump into that, I want to remind everybody, if you're watching us live, go on ahead and leave us a comment. Just say, hey, ask any of your questions that you have for either us or our guest. If you're watching on the replay, comment #replay. Again, leave us your questions. And if you're listening on audio, rate us 5 stars. So without further ado, let's go on ahead and jump into the conversation. Like you said, we're talking about warranties today. And to help us learn all about that, we have Rohan Shah with Extend. Rohan, how are you?
Doing well. Love to hear that Francois is all about warranties. That gets me fired up.
I'm a big customer. I'm probably your most ideal customer.
We'll do the targeting to you all the
time. Damn it.
So Rohan, let's just go on ahead and start with a little bit about your background. How did you find your way to Extend?
Yeah, absolutely. And first off, really appreciate you guys having me on. Excited to be chatting with both of you. So I guess my background, I grew up in the Bay Area, so I've sort of been around the tech world my entire life. After college, so I went to college down at Stanford, and after college, I actually started my first company in the HR tech space. So ran a company there for about 3.5 years, sold that off. The short story is that I didn't love building recruiting software, and so wanted to sort of explore some other areas. I spent the next 3.5 years at a company called BCG, Boston Consulting Group. They have an arm called Digital Ventures. So really the mandated Digital Ventures was, how do you build startups for the Fortune 500 clients of the firm? So really doing everything from market development and concept development all the way through actual product development. So I led product there for a lot of the new ventures that we built up and spun out across financial services, insurance. Actually spent 16 months in ag tech working with vegetable and cannabis growers. So really a huge array of different projects. One of the sort of connective tissues around all of them is there were massive distribution problems with large corporate entities who couldn't get their products and services out to a wide range of consumers, especially as you think about, take e-commerce, for example. Traditionally, it was just brick and mortar retail, right? And so you focused on in-store environments. As e-commerce continued to grow, there were new distribution channels that legacy companies couldn't take advantage of. So that was really the impetus for how myself and my co-founder started thinking about Extend. You pair that with sitting here in San Francisco in the WeWork right now, there are companies like Stripe, right, who really solved e-commerce technology issues and distribution issues for retailers online who wanted to take payments and credit cards. Companies like Affirm and Klarna and Afterpay, who really focused on, what we called layaway as kids, and you didn't really talk about it with your friends, into this sexy buy now, pay later consumer point of sale financing. What we noticed is there were companies like Best Buy, Costco, Wayfair, Walmart, and Amazon who sold extended warranties, and no one else in the market with e-commerce was really doing that. So that was our sort of genesis of thinking through this opportunity. And turns out there was a real market demand from folks like Francois and others to buy these products and services online. They just weren't being offered them. And that's sort of how we got the ball rolling. So it's been a pretty crazy ride. We started the company in February of 2019. We got the team up and running pretty quickly. So we sold our first contracts in June of that year, and then have just been growing the team continually since then. So, most recently we raised about a $260 million round led by SoftBank and PayPal nationwide, and Amex also participated. And the team's about 285 or 90. It's probably changing day by day right now, but wow. Pretty large team that's grown really fast. So it's really exciting stuff.
That's impressive. That's a huge team in that short amount of time.
It is. It's like 10 people for every month we've been in existence.
That's crazy. Wow.
Yeah. It's
well,
been fun.
and I have to admit, just up top, Francois is your ideal customer. I'm the one who's clueless on literally everything. I've never bought a warranty on anything. I didn't even know the details of my manufacturer warranty on my car when I bought it. Like, I'm not the girl. So I'm going to be here with all the newbie questions and learning a ton. So
hey, that's great. That was me 28 months ago. But I'll tell you, I'll ask you this. Like, have you ever bought Applecare, Lisa?
I'm not an Apple person.
Ooh, okay. So then we're gonna have problems regardless. But no, I'm just.
We
kidding.
had to get her an iPhone so she could stay up to date with iOS itself. So
there we go.
You guys, they had to get me an iPhone so I could on Clubhouse, and now, now Clubhouse is on Android, but I still have to use the iPhone to more easily access the Apple Podcast link for this show. So I use that phone twice a week, and I still fight with it constantly.
Well, if it makes you feel better, I had to buy wired headphones for this podcast. So we all have our deficiencies. But it's funny though. We do talk to a lot of folks as we're out in the market selling, and people have that sort of reaction. They're like, I never buy extended warranties. Like some people say, oh, I think they're a scam. And then a lot of times I'll ask people like, do you buy Applecare? And people are like, well, of course I buy Applecare for my iPhone, for my iPad, for my MacBook. And I'm sitting there and I'm like, that's an extended warranty program, right? People don't recognize, because it's branded as this Applecare amazing, elegant experience, that it truly is just an extended warranty. So there is a paradigm in the world where extended warranties can support customers in what they're looking for out of the manufacturers and products that they use. The issue is that the legacy companies that have really pervaded this space don't put the customer first. They don't have a customer experience that's really elegant and seamless, something that a company like Apple with, $1 trillion balance sheet can really provide for. And so customers don't buy them. And so trust is really a word that we focus on a lot, is like, how do you build experiences through technology in most cases, but experiences that consumers trust? Because ultimately that's what drives loyalty and repeat engagement for the retailers and brands that we work with.
And can you explain a little bit about an extended warranty and how that differs from something like a manufacturer's warranty?
Yeah, absolutely. So let's take a product, one of our partners, JBL. You may have a JBL little flip speaker at home. Yeah. There's two types of extended warranties that we sell. So JBL has a 1-year manufacturer warranty on the product. So if anything just breaks, electrical or mechanical failures, that's what's covered by a limited warranty or manufacturer warranty. In the first 12 months. We have one product called sort of a traditional extended warranty, where you probably want to use that speaker for more than 1 year. What happens in month 16 if it breaks? Pardon my French, but you're a little shit out of luck, right, in that situation. So one of our products truly extends the lifespan of a manufacturer warranty and gives customers the ability to add another year, 2 years, or 3 years onto the end of that manufacturer warranty. So it extends the life cycle for electrical and mechanical failure. We have another product, which is actually my favorite product because it covers clumsy people like myself, and we call it the accidental damage from handling plan, or ADH policy. That starts on the date of purchase and covers things like drops, spills, cracks, really human fallibility as it relates to the products. Those are the products where customers really go above and beyond, or get above and beyond the coverage that a manufacturer warranty provides. And it's something that as a manufacturer, it's extremely risky to take that on, right? If you're going to cover all issues that happen for a customer that are accidents. And that's sort of like the value prop, if you will, of the programs and the services and offerings, is giving customers options of like, do you want to increase the lifespan of that product and extend the manufacturer warranty? Or do you really want to cover issues that you might have, accidents, if you will?
Now, how does that work though, when it comes to like the upstream supply chain? Like, what do you have to understand about the manufacturing and the, I guess the quality even of the product? Obviously you hear something like JBL. I immediately think quality. If I hear Sony, JBL, any of these larger brands, I just associate it immediately with that. I don't assume that it's going to break within 12 months. That's just not my assumption. But there's always that one chance. And that's why I always buy warranties, because it's extended warranties, at least, because it's like, what if it is 16 months? Like, what if they really had, and this is because we're more so in the supply chain, the upstream supply chain of actually creating the products. And we see it all the time where it's like, there's a let's say there's a shortage in some sort of raw material. So now they might substitute that out without the manufacturer themselves actually knowing. And it could be something that just slips by, and it just always has me scared personally. But what do you have to understand about that?
Yeah, it's interesting. So maybe I'll give you sort of a historical view, which I think informs some of the answer here, which is traditionally insurance carriers are the ones who hold the paper or the risk traditionally for these programs, right? So these are folks that we partner with on the back end, like AIG and Fortegra and others, who really underwrite these programs from an insurance and actuarial perspective. The way they look at these programs is, let's use JBL as an example again, since we just talked about them. They'll look at that as portable audio equipment. For them, portable audio equipment is a category, and all of their assumptions around frequency of failure and the cost of failure are built around that category. So it's super generic and broad. That JBL speaker is looked at the same as a Sony speaker, which is looked at the same as, an XYZ new manufacturer speaker that you've never heard of before, which we don't believe is where the world is going. We think there's a data-driven hypothesis around different manufacturers having different quality levels, and the risk should be priced that way. Now, like I said, we're 28, 29 months old, so we're not at that point yet of being able to underwrite those as granularly as we want. But what we do is we look at those frequency numbers and then severity or cost of failure numbers to price the risk. We're not going down today at a component level to price the risk of these programs. However, what's really interesting about Extend, unlike these traditional insurance carriers, is we live in an intersection of the merchant, the consumer, and the insurance carrier on the back end. We're integrated with the e-commerce system, so we know exactly what SKU is being purchased. It's not portable audio. It's JBL Flip 5 with an orange case around it. So we know the exact SKU. Then on the back end, we are handling every single customer claim. So I know that Lisa, who doesn't buy extended warranties, bought the JBL Flip 5 with an orange case with an extended warranty. And she filed a claim in month 17 and talked about electrical failure as it relates to the plug that charges the speaker. We know that data. So now we can start to do a sort of retroactive product deep dive. And we work with the R&D teams at our merchant and manufacturer partners to start giving them insights into what failures are happening with which components at what point in time. They've never had that life cycle of data. There's not one system of record in their own enterprise that helps them aggregate that information, sanitize that information, and then actually provide insights around that information. So we are getting to a point in our company's maturity now where we are actually improving some of the product lifecycle aspects, and again, some of the supply chain and manufacturing aspects of these manufacturers' products, which is why we've been so successful with manufacturers specifically. You look at our portfolio, we work with folks like Peloton, iRobot, Logitech, JBL, just in the consumer electronics space. We do furniture, jewelry, accessories, sunglasses, auto parts, and more as well. And we're really starting to build a flywheel of not just driving revenue from the extended warranty sales and improving customer experience through this elegant claims process that we've created, but actually a loop that brings data back into the fold so they can improve their supply chains and they can build better products for their customers, and that they can go back to suppliers and say, hey, your part is failing at an exorbitant rate in month 16. We're going to renegotiate our deal with you, or we're going to go to another supplier. And it gives them that flexibility to make those business decisions.
Yeah, well, that's mind blowing, first of all, and kudos to you guys for figuring that out in such a short amount of time. I mean, that's data that typically I would see a manufacturer maybe just account for on a general basis. They might say, we account for 5% failure rate. We're going to order an extra 5% of parts, or they're going to account that into the pricing, whatever the case may be, or work out terms with the contract factories, whatever those cases are.
And you probably see it right on the manufacturing side, where manufacturers literally need to reserve a portion of every transaction for potential claims. Most of them, from what we've seen in our experience working with a number of them, most of them are like, let's assume it's 2%, or let's assume it's 3%, and we'll reserve 3% of each transaction for potential manufacturer warranty claims. There's not a data-driven process that's informing that assumption. Some of them don't even do it when it's smaller brands that are selling on Shopify in most cases. So being able to inform the finance and accounting teams in terms of how they should be reserving for revenue, We recently are launching a manufacturer warranty product as well. So we're not just doing extended warranties, we're also helping them manage their extended manufacturer warranties as well. So there's a lot of solutions that we can bring technology into the fold to improve the data that we're capturing, but then also streamline the customer experience and the merchant experience around products post-purchase, which we've seen a lot of technologies focus on the up funnel, right? Buy now, pay later, Stripe, all these companies, they're all up funnel, pre-purchase or at the point of sale. No one's really tackling the post-purchase and the experiences around that, and that's where we're really focused on.
Well, it's not as sexy, to be completely frank, because then you start talking about preventative measures, right? And preventative measures typically are put on the back burners for a lot of these larger merchants. Even, the majority of smaller merchants, like you said, they won't account for that. They may just say, hey, on the next round, X supplier, we had this many defects. Can we account for those or renegotiate some of our rates?
Yep.
And it's getting tougher and tougher with the competition also increasing across the board. I mean, we're seeing thousands of new Shopify stores daily, I think is what the last statistic I saw was. How are you helping them improve when it comes to the manufacturer warranties? Because, that itself, it gets more complex when you start. Obviously, the bigger you are, it's easier to negotiate a decent manufacturer's warranty with the actual factory, but then you have to enforce it yourself, right? So if you have a 12-month warranty with your factory, you might provide a 3 to 6 month warranty to your customers just to account for the sales cycle, plus transport and all that. How are you using your data to help the merchants negotiate or create those manufacturer warranties?
Very good question. So, let's start with the reality, which is the majority of brands out there, when a customer calls in with a manufacturer warranty claim, they do one of two things. They do everything in their power to not approve that claim, and customers are pissed off, or they do everything in their power to just say, great, here's a new product to the consumer. And they just give them a net new product and they do it at cost, right? Those are basically the two buckets that I would simplify it down into. What that tells us is that the primary objective they're trying to figure out is how to either reduce cost or just streamline the workflow, because it's too costly to have one of their support reps try and figure out what's wrong with the product and then go through any sort of repair or replace process. This is especially true for lower AOV products, right? Ones that aren't thousands and thousands of dollars where there's a serious cost to replace it. So we are really focused today on optimizing the customer experience around those flows. What do we do for extended warranties? Customers call in with an issue. We adjudicate that claim, determine what the failure type is, what the problem is, whether it's valid and under the terms of the warranty that they've either purchased or have. And then we help them fulfill that with a replacement or a repair. That's the same exact workflow for a manufacturer warranty. Now, a manufacturer warranty is not a revenue driver for a manufacturer or a brand. So guess what? It's a lot easier for me to sell extended warranties to a merchant or a brand than it is for me to sell manufacturer warranties. But now people see the process, they see the customer reception and the high satisfaction numbers, and they want us to manage that manufacturer warranty process as well. That process captures the data that you're talking about. That process is where we start capturing data around failure types throughout the entire product lifecycle, not just during an extended warranty period. And that's how we start informing those insights for the R&D teams. So it's not a flip of a switch and turn it on and you have these insights available. You really need to buy into the vision of how do we want to deliver better customer experiences, both from an experience and post-purchase perspective, but then also from a product level perspective. And who are the folks internally? The reality is most people, especially the smaller Shopify brands, are not set up to even do anything with those insights today, right? You need teams around product and R&D, and they're focused on how are we going to get our next order out the door. Much more mission critical issues than optimization on their supply chain at this point, right? Supply chain is just something they have to deal with. For the more mature brands that we work with, this is absolutely table stakes for them. This is how they make their margin. This is how they optimize their margin. And this is how they, in many cases, report to the public markets around where the company is going and how they're making improvements that they need to make.
Yeah, I guess when you start to talk about shareholders that you have to report to and talk about forecasts and talking about those actual defect rates to where it matters because it's someone else's money, that's where the data would definitely be beneficial and not just the typical 12-month maybe term. Is 12 months a typical manufacturer's warranty?
At the sort of mature brand level, absolutely. Different products are different, right? For mattresses, more traditionally, it's like 5 or 10 years for a warranty. For electronics, 12 months is sort of an average.
But those I guess every warranty also tends to be very limited. Like I remember when we started getting into countertops, and countertops limited warranties where, I mean, when I read through them, it was basically, you're getting what you pay for. Even though this is a lifetime warranty, let's say it cracks or you have water stains or anything that might have happened to that countertop, they included in that limited warranty as not covered.
Yep.
Is that something that you take into consideration with the extended warranties? You only cover what they're covering for that specific product?
So for extended warranties, yes. Now, to be transparent, we tailor what program we're offering to a consumer based on the product type. So for a product that it doesn't make sense, so let's take a mattress, for example. On a mattress, we would never sell a traditional extended warranty product. Having an extension of the limited warranty that's provided is not valuable to a consumer. What a consumer wants is, I want protection from rips, tears, stains, indentations in the mattress. Those are all considered accidents, if you will. That's what we cover for mattresses, and we will not sell a contract or an extended warranty that simply extends the lifetime of that limited warranty. So we tailor these programs to each of the products that we cover, and we have an engine on the back end that's informed to do that. But to answer your question in terms of, exactly what types of coverages, in many cases, we're actually designing new coverage types. So we actually have our own insurance company, our own underwriting entity in obligor that allows us to spin up new coverage types in the market. I'll give you a fun example that I'd like to share, which is around iRobot. I don't know if either of you have a little Roomba Zumba thingy at home.
Yeah, I have a Chinese version, but yeah.
There you go. Supply chain guy. So those Roombas, one of the biggest issues that they found, their customer support team found that customers have, is that they drive over dog shit and cat pee, like animal feces. And so what did we do? That wasn't covered from traditional insurance carriers. That was not something they even entertained. So we built them a custom program that covered animal biohazard as a specific coverage type under that policy, right? So thinking through, like, we are super engaged with our partners' support teams to figure out, hey, what do customers really want? That's innovative coverage. Selling the same contract policy that's been sold for the last 40 years is not innovative in that approach. In some cases, it may make sense, but not in all cases. And so we look at ourselves in some cases, and this is my background, but like, we look at ourselves as consultants. Like, we're going in and figuring out exactly what is it that we need to deploy to a merchant's customers that's going to be valuable. If it's not valuable, there's no point selling it, because customers aren't going to buy it. Customers are intelligent enough to look through and understand. So we really take a hard lens on exactly what we're covering and why. And if there is a reason to be covering it, that's when we go out and sell that warranty or that protection plan.
Yeah, I mean, I guess that's the last thing I thought about. Pets are housebroken, so luckily I never had to worry about that. But when it comes to cost, because a lot of what you're also mentioning in these newer policies to merchants, it seems like they're just greater risks, where it's like, hey, before we didn't have to worry about this because it wasn't covered. But now that we're bringing these new innovative solutions, one, of course, is going to provide better data. These are things that their customers care about. Now, maybe iRobot can start to market that, hey, we've considered this in the past and we are working to improve it. Maybe we're updating the software, whatever the case may be. But how does that play into cost when it comes to innovating in the warranties?
Yeah. And one thing I think you said that's really important, right, is how you market it. Like, I think from a consumer perspective, for a brand that you've bought 4 or 5 different products from that you're very loyal to, like, the number one thing you want to hear from that company is, we hear you, right? Like, you've probably complained about your Roomba driving over dog poop.
No one heard me,
right? No one heard you, right? And so I think it's really important to think through, even at the outset of when you're selling a product, customers feeling like you hear them and you're listening to what they have to say and then reacting to it and providing them value around that. And I think, extended warranty services can be a real one solution as part of actually delivering on that promise. I think to your point around cost, one of the interesting things about the programs in the extended warranty space, just as a blanket, is that merchants don't actually shoulder any of the risk. Brands don't shoulder any of the risk on these service contracts. They're known as service contracts legally, extended warranties, protection plans. They're all sort of interchangeable. We hold all of the risk, either us or our insurance partners. We hold all of the performance obligations and liabilities around the program. So when a customer files a claim, we take in that claim and we serve that customer and handle that customer, as well as we handle all of the fulfillment. So when an extended warranty is sold to a consumer, the merchant or the brand actually has zero risk whatsoever. It is pure profit margin, the portion of that sale that they keep as revenue. There are no costs or risks. Now, the premium, if you will, right, the cost of the insurance, if you're including something like animal biohazard, may go up 5%, 6%, whatever that may be. We price all of that out. So it can be more costly to provide a coverage type to a consumer that is newer or more innovative or more comprehensive. But again, that's like every other decision we make, right? It's typically more costly to do better by the customer. The way we look at it is it's pure margin revenue. It's completely accretive to your bottom line as a merchant or a brand. And if it's slightly more costly on the back end, you can price it the same to a consumer. It's valuable in most cases. And I think this is a space that, for lack of a better term, has just gotten a lot of fat cats who have really, really high margins and don't really care about serving customers because the customer bought the policy 2 years prior. And that's when the issue happened 2 years later, that they don't really serve customers in a way that we think drives loyalty. And that's where we saw an opportunity, frankly, and why we're really excited about the opportunity.
And so for the pricing of these warranties, I'm assuming Extend is setting those, right?
Extend and our insurance partners, right? Okay. So there's a cost. There's sort of like 3 portions of the entire retail value of an extended warranty. So when you go onto JBL, you see that $50 warranty, let's just call it for easy math. And there's sort of 3 parties involved in that. One is the insurance provider. That's the premium on the program. That's the actual cost of the insurance. The second is the merchant. So the merchant captures a portion of every sale as pure profit. That's the revenue driver aspect to these programs for the merchants and the brands that we work with. And then Extend takes an administrative fee. That's our cost and our fee to then service these contracts when customers or if customers have issues with their products. So that there's a retail value that consumers are buying into that has all 3 parties involved in that cost structure. So when I talk about the cost increasing for different coverage types, that's the insurance premium that I'm talking about. Mm-hmm. Because the insurance cost now goes up for covering more for that consumer. So the price to the end consumer doesn't need to change. It just becomes a higher cost structure on the insurance side.
Okay. And we have Rudy tuning in from YouTube saying, I have kids, boys, extended warranties have kept me from killing them. So somebody else, a fan.
Hey, we got your back, Rudy.
Get extended insurance. When it comes to extended warranties, is it something where the consumer has to go to the manufacturer's warranty first, or is that something that Extend starts to cover the first day that they purchase it?
Yeah, it's a great question. Depends on the policy that they've bought, right? If it's an accidental damage policy, in most cases, customers will just come straight to us and file a claim with us. Today, if a brand is not leveraging our manufacturer warranty solutions, but it's a manufacturer warranty issue, we will pass that customer back off to the manufacturer and basically say, hey, this is a manufacturer warranty issue. The product just didn't work when it showed up, right? And they will handle that. For all of the other issue types, we'll handle those customers completely. So it depends on the type of failure and the type of issue. We go through a decision tree with those customers, either through, so we have like a chatbot on our website that's available 24/7. It actually does like over 97% of our claims today in less than 90 seconds. So just thinking about the time period. When you have an issue with your product, Francois, do you want to sit on hold for 45 minutes during the middle of the workday?
No, but I will.
you will, because you want a new product. You're exactly. a stronger human being than I am. I won't. I'll just go buy another product. But that's the type of experience that we're changing, right? Is like you can put your kids to bed, like Rudy here, and file a claim on your phone and have that claim be adjudicated in less than 90 seconds through our chatbot, Kaylee. So giving customers that channel of file claim whenever and however you want is really, really something that resonates with customers. We do have a call center, of course, with better SLAs than many of the traditional warranty providers. So it's really giving customers that flexibility on the claim side that resonates. But ultimately, what we hear a lot in the market is customers buy these extended warranties with fear, right? They're worried about what could go wrong with the product. And when they don't get served on the back end, it completely loses trust in the overall program, right? The extended warranty provider, but also the brand that they actually bought the product on as well. And that's what we're trying to change. And that's why we're so brand centric in terms of our approach.
I like that.
Yeah. Because I just had a bad experience. Talking about warranties, I just had an Oral-B toothbrush that just stopped working out of nowhere. It was a retail product, so I had to go through their entire retail sector, and the 45-minute conversation was actually like a 2-hour-long conversation. And there was so much proof that I actually had to provide them, including like the receipt. There was a serial number on the inside of the box that they expected me to hold on to. I was like, do you really expect me to hold on to them, like all of these items? But when it comes to streamlining, I would imagine that one of the risks also that you take on are false claims. And if the chatbot is taking over 97% of all claims nowadays, how does that work? Well, I guess my real question behind that even is, do the products come to one of your facilities versus the manufacturer's facilities? And then when do you pay out or replace those items if your chatbot is taking over 97%?
For sure. So it's a very good question. Fraud is no doubt an issue in every space, right, as it relates to retail and e-commerce. We do have some fraud detection built in to our chatbot. And so in many cases, we're detecting that fraud and then providing an escalation path through our customer support or our call center. The flip side of it is we like to start our programs off by trusting customers. So what we do is customers go through the claims process. They answer a subset of questions that they need to based on the product. And then we will make an adjudication decision on that claim. By adjudication decision, I mean, did we approve it or did we deny it? For the claims that are approved, what we do is, first and foremost, my favorite part is we throw up some confetti during the chatbot. But then after that, what we do is we provide customers with a prepaid shipping label. That prepaid shipping label is something they then use to put the product into a box and they send it in. That'll go to one of our facilities on the back end, so a reverse logistics center or a recycling center, depending on what type of product it is. As soon as that package, right, with the shipping label is scanned by the carrier, we are notified, and that's when we generate store credit for a customer to, say, go back to jbl.com to get a replacement product. So we're actually driving customers back to the retail ecosystem, the e-commerce store, to get their replacement products, which, I call it the Walgreens effect of, I don't think I've ever gone into Walgreens and spent less than $50. We do see customers then buying more products now that they're back in the shopping experience. So we do like to trust customers. We don't wait for those boxes to get back to our facility before generating that store credit. If we do detect a large amount of fraud, either from a specific customer or within a specific merchant or product type, then we can stage gate it to say we won't generate that store credit until the box gets back to our facility and has been inspected. So we have different stage gates, and we're monitoring claim frequency as well as the fraud rates within that to then assess how do we need to either deploy the program differently or have different stages at which we will provide customers the fulfillment on the claim. To be honest, the beautiful part is today, we haven't seen a ton of customers like shipping in bricks as far as their claims go. And so, again, trusting customers and delivering the best customer experience possible until you learn that you can't is sort of our approach.
Mm-hmm.
I just had that conversation with Lisa earlier because we were talking about trusting. Trusting is definitely one of the most important parts. And to your point about sending them back to the store, I would probably spend more because I feel like I won something. Mm-hmm. If I file a claim and I know that I'm being honest, and it's done within 90 seconds, as a consumer, I feel like I won. Like, mm-hmm. Hey, they took care of me. I will probably buy a better speaker. Maybe next time I'll spend the extra $50 and then I'll get another extended warranty. But how does that extended warranty work after that claim? So say I'm a consumer, I return it, and then, I go back to JBL, buy a new speaker. Do I have to buy a new warranty also?
So it depends on the product type. So let's take the JBL speaker, because that's what we call like a replacement claim, where we're just getting you a net new product because it was a $200 speaker and it's more expensive to try and repair it than it is to replace it. We'll get you back onto the website. It'll be $200 in store credit that you can use. So you can upgrade to the $300 speaker. That's totally your prerogative, your choice. We do see, again, because these are customers that buy extended warranties first and foremost, but B, because it's a customer that just had this like sexy, clean, elegant experience around the claims process, we do see an overwhelming majority of customers then buy another extended warranty onto that replacement product as well. That's a one-time use replacement product claim. We do sell other policies. Let's take a couch, for example. You're not boxing up a couch and sending it in for a repair or a replacement, right? So for couches, we actually, in many cases, will dispatch a technician that's in one of our service networks to your home to fix or reupholster your couch. Say the couch costs $4,000. Say the claim cost $400. You still have $3,600 remaining on that contract. So you're entitled to multiple repairs during the lifetime of that contract up to the retail value of the product. So different contract types have different terms and policies within them. For most of the repairs, you actually are entitled to more than one repair. For most of the replacements, it's typically one replacement, and then you have to buy a new extended warranty.
And is that something that I guess merchants need to inform the consumers of before they make that purchase? Well, I know I've seen the extend ones where you just select it, and I think there's like a learn more or some button right next to it where you could read into it. I've definitely clicked that before.
I love it. But my product team loves you.
Yeah, no, I'm sure it's more data points for them. But is that something where it would explicitly say, because I would imagine more oversized items, it's definitely going to cost more to ship it back in with any carrier, no matter who you're shipping it with. But is that where you would read in that warranty very early on, this is a repair warranty, not a replacement? Yep.
It's always towing the fine line of like throwing a ton of information at consumers during the e-commerce checkout process can be very scary for the merchants and the brands themselves. So we do pull a lot out of our contract terms and conditions and just make it plain English for consumers. As you said, in like the learn more modal, even when customers click add to cart, a lot of our partners have a modal that pops up that gives customers clear and transparent messaging around what gets covered. Is it a repair? Is it a replace program? Things like that. So all of that's upfront. And then when customers buy, they get a full set of details with all of the transparent terms and conditions. If you read terms and conditions, sounds like you probably have, Francois. They're usually
I'm pretty diligent with my purchases.
They're usually, I mean, like in my plain English, they're usually a dumpster fire in terms of reading through them. Like they're not clear. You don't understand what someone's actually saying in the terms and conditions. Because we are our own insurance entity, we actually redesign those to be plain English, like bullet points, clear. There is fine print, if you will, that the insurance company mandates is in there, but everything that's covered for the customer and relevant to the customer is translated into English that I can understand because I'm not a lawyer. So we do provide way more transparent messaging, both up funnel through the purchase flow and then after the fact when customers buy. And again, we send reminder emails to customers. Hey, you have an extended warranty. Make sure to click here to file a claim if anything goes wrong. Most of the legacy players will just hide in the shadows and hope you forget about that contract. You mentioned saving paper receipts and having serial numbers. Like that's bullshit. It's such a gotcha that existed 20 years ago when you had to call in a call center. I feel bad for the people at the call centers who are mandated to do things like that too, because they're probably sitting there like, oh my God, this is so frustrating. We don't require that. We live through the digital transaction flow. You enter your email address and 6 different products that you've bought extended warranties on pop up, and you just click which product you want to file a claim on. So removing all of that friction, is slightly more costly. As we were talking about earlier, it's a better customer experience. We expect higher claim rates than traditional insurance carriers would. That's okay. There's enough margin in this space to go around. If you deliver on that customer experience, guess what? People buy more extended warranties. So it's a self-fulfilling prophecy where people are going to start demanding extend in the market. And they already have, right? If you look at the velocity of brands that we've been able to sign up, I think we signed up like 95 or 100 merchants last quarter, simply because people are starting to hear about us and customers are starting to talk about, do you offer extend protection plans on your products? Which, that gives me that warm, fuzzy feeling inside for sure, because it's sort of a testament to what we've been focused on for all this time.
Oh, definitely. And I'm curious, in this conversation alone, we've mentioned warranties on mattresses, couches, toothbrushes, and speakers. Is there any like category of products or any like list of products specifically that extend warranties kind of works best with?
Yeah, I mean, I would say traditionally consumer electronics is the most well-known category from an extended warranty perspective. I would say furniture is a close second. So furniture and mattresses. Those are probably our two biggest categories today from a volume perspective. Although, we partner with Advanced Auto Parts. We power their extended warranty program, both in store through 4,000 brick and mortar locations. That's auto parts, aftermarket auto parts. We're covering things like windshield wipers and car batteries and things like that. So that's a really interesting one. Accessories. So like one area that I'm super excited about is like sunglasses and glasses. I wore glasses for, 25 years, and those things broke all the time when I was playing basketball and whatnot. A protection plan for glasses, for breaks and cracks and lens issues. I think that's really exciting because it's a super high consumer value of something that you use all the time. I guess I don't anymore, but Francois does, right? And so,
He does. Well, I was going to ask, when your cat knocks your glasses off of your face when you're working at home, is that covered with one of the accident?
We cover that. We cover that. Absolutely. Yeah. See, you're catching on. So glasses is another really cool category. Jewelry is a big category, actually. So especially if you think about expensive wedding rings and engagement rings, we cover broken prongs, lost stones. It's another category that I'm really excited about. So we recently signed up some pretty well-known partners in that space. So the list goes on. I would say the better question, and it surprises a lot of people, but the better question is like, what don't you cover with extended warranties? And I would say the primary one is like apparel and fashion, like not fashion jewelry, but apparel and like fashion items like shoes and clothes and stuff like that. Really, you're not covering that with an extended warranty. We do cover bags, so purses and backpacks and luggage and stuff like that. But the clothing area is one that we don't.
Now, is that more so like fast fashion, or would you cover something that's maybe higher end, something that a shirt might cost, a couple hundred?
Yeah, it's interesting. Part of my mind, I'm like, it would be cool to like build a program for more expensive fashion items and clothing items. I think the reality is, and you guys know this being in the supply chain space, is like the COGS on those super high-end clothing pieces is so low. Like the margins are so high that it's actually in that brand's best interest to just replace everything if there's any damage or issues. They just want someone coming back into their store. And so I don't think the drivers there are as powerful, both at the merchant level, but also at the consumer level, for it to really be a focus area for us. Maybe one day, I would never say never on these things, but it won't be a near-term focus for us. That's for sure.
Yeah, that's the bell that went off in my head when you said bags, was like, I can't imagine like Louis Vuitton having an extended warranty because they fix like anything and everything, regardless of how long you've had it. Even Coach has a pretty all-encompassing, plan, Fossil, Michael Kors, all of them. So
I would put those into a segment that we sort of call like luxury fashion, where it's like customer experience is the only thing they care about, because you guys know this, like the products are made in the same place as the $20 bag. And so
same factory,
same factory. Yeah. It's just a different logo slapped on the front. And so, I think they're less concerned about some of the issues that other manufacturers are, which is very supply chain focused, very margin focused. As well as like, hey, we can't just replace everything, right? Like that doesn't work from a cost profile perspective. And that's where we have the most success. Watches is another great category. They'll keep.
Oh, I'm sure watches is great. Yeah.
It makes sense. Those are also things that I think you typically would go into a store for to buy in the first place.
Maybe pre-COVID, but everybody's getting everything online now.
You would be surprised.
Like a $200, $300 shirt?
Oh, yes. Sure. For sure. And we work with merchants, like a merchant called Crown and Caliber that sells like $15,000 watches online, and they sell a good amount of them. There's a few marketplaces like that as well. You know, I mean, even companies like StockX sell watches. There's a pretty good market of people out there that are willing to buy expensive items, especially well-known expensive items, right? When you're talking about a watch, you're like, it's a Rolex Seafarer or something like that. They know what they want. They're just looking for the best price point that they can find online.
Mm-hmm. Yeah. And even like with apparel, like you said, like a $200-$300 shirt, it's why everybody's gotten so much tighter around like saying what the measurements are for this shirt. Like I know with men's shirts, you guys have like the neck measurement, whatever. Like,
what, do you not have a neck measurement? Can you not measure your neck?
No. But like, you know what I mean? The size charts are much more exact. Like some of them, this might be a fever dream, but like some of them have like take a picture of yourself and will like scan virtually what, you know, how broad your shoulders are. And like they've gotten so advanced with being able to do that kind of stuff online that, I think folks are just going totally e-com, even for the
I mean, Warby Parker has this new thing where you can like see the glasses on your face in the app. If anyone on here is from Warby Parker, please give me a phone call. Would love to talk to you. No, I mean, it's really cool to see some of the immersive experiences. I mean, it's not like directly related to our business in most cases, but I think the connective tissue is just like unique customer experiences is what people are looking for. And that's both pre-purchase, right? Like a Warby Parker, try your glasses on before you buy them. All the way through down to post-purchase, where now you can drive elegant experiences for customers. I mean, let's take a look at Amazon and Walmart, the two biggest retailers in our country, right? Mm-hmm. They win on services. They don't care what the product is. They don't care what the price point is. They win on services, 2-day shipping, really great customer support. These are the ways that they get people back to their website. And I think the rest of the retail market is catching up now and trying to figure out, if I don't have the infrastructure to spin up logistics facilities across the country, how am I going to do 2-day shipping? There's 50 companies trying to figure this problem out, right? Mm-hmm. For retailers and e-commerce brands, drop shipping companies, et cetera. We see that evolution post-purchase happening after the pre-purchase stuff. And we think it's time for that now. So from a timing perspective, ourselves and other companies that are really focusing on post-purchase is where you're going to find the loyalty flywheel and the LTV flywheel versus the purchase conversion flywheel, which is more the up funnel stuff.
Mm-hmm. Well, that's definitely, I think, a maturity standpoint, right? In the industry where it's hard to compete with the marketplaces because they have the supply chain infrastructure to handle the 2-day shipping and hopefully soon enough the drone shipping, which is going to be one day, hopefully within a few hours. But I see it personally as a sign of maturity because when I go to Amazon and I purchase something, I know that if anything is wrong with it whatsoever, even if I understand it's coming from a third-party seller, it's being shipped from Amazon. A lot of people don't know that. They see it as, I'm just making this purchase from Amazon. And no matter what, Amazon's going to take care of me. They're going to return it. They're going to refund my money, give me store credit immediately. I'll buy a new one. Or they'll exchange it, whatever the case may be.
At cost to the seller.
At cost to the seller, which is very expensive in a lot of cases, especially when we're talking about things like furniture. I know I have personally, I felt bad. I was pissed. I opened a box. It was, to be frank, it was a shit product. It was super cheap, but I returned it. I felt bad because I was like, well, I'm not sending in the original box. It's a lot bigger. It's more oversized. This is going to cost that seller a lot of money. Trick of the trade is just sell me a good product. I don't know. Yeah. But when you go on to like Shopify stores, for example, that element of trust isn't necessarily there, no matter how beautiful that store is, unless I do see things like verified secure purchase, or I see that Stripe symbol, or I see extend. And I'm like, oh, they're mature enough to even work with these companies. And as a consumer, not even considering that I recognize them as service providers, it's like, well, it used to just be if you had the Visa, Chase, MasterCard, Discover at the bottom, you were reliable. And now it's like if you have Afterpay, if you have Stripe, if you have anything else on there, it just gives you that one level extra level of just like, I'll pull the trigger because what's going to go wrong? I'm in good hands. Extend's going to take care of me should anything go wrong. Yeah.
In the same way that I think Afterpay does the trick because it's like, I have flexibility in how I need to pay for this, right? And that makes me more likely to buy. We have a partner called BlendJet who sells these really cool portable blenders. And they A/B tested with and without Extend on their website and saw a significant increase in purchase conversion. And so they surveyed, and it was like, we have more trust in a brand that works A, with Extend, and B, provides me protection on a device that I think could break, right? A portable blender. So there's some interesting consumer behavior and psychology around it too. I mean, I would actually be curious from your guys' perspective. You know, we see a lot of these like Amazon roll-up companies right now getting a ton of venture funding. And I think a lot of the times what I hear from them is it's creating like supply chain efficiencies on the back end across like 100 different brands rather than 100 different sellers trying to figure it out on their own. Right. Do you guys play in that space at all? Like, I know you guys are heavily
we know some of them. And we'd be glad to make some introductions. If you actually want to answer to that question, I wouldn't be able to answer for them. But I would imagine a lot of the conversations that I've had is based around utilizing service providers to make their processes more efficient at scale, right? Like you're saying, not having 100 different people trying to figure out 100 different solutions. It's let's find this one centralized process that we can implement across the board, whether it's 5 brands or whether it's 20 brands that they acquire. Those are the conversations we've had recently with Elevate, even actually.
Nice.
Yeah,
we're heard of Elevate tomorrow. Very cool. Yeah, I mean, I think it's fascinating. I think like the horizontal operating model behind those like roll-up companies is so valuable because, you know, I mean, I have a ton of respect for every entrepreneur out there, obviously being one myself, right? But starting a brand is very, very hard. I wouldn't wish that on, you know, anyone because it's a super, super tough problem. Like you got to figure out product, supply chain, R&D, packaging, and then you got to figure out how to sell it on a store, right? Like how do you get eyeballs to come to you? So you need great marketing. I just think when you can consolidate a lot of those and have functional experts that work across a portfolio rather than work across just one, you learn a lot faster. And then you can deploy a lot faster too. So I think that's an area that, you know, we think about not a ton, but a decent amount, just thinking through like, where is the world moving, right? Where do we need to be, you know, grabbing onto, for lack of a better way of putting it, to make sure that we stay top of mind for where the successful brands are going to be coming out of. And it's not an easy problem to solve. So you got to put your investor hat on sometimes and sort of think about it that way. But it's a fun problem, right? It's fun when the world you live in and the space you work in is evolving at a pace like that. Fun and terrifying, I would say.
Yes.
No, it's definitely fun. I mean, we've had a lot of fun innovating in the supply chain space. And I mean, all it really is a lot of problem solving. It's taking other people's problems and amplifying those to your team and just figuring out, hey, how can we make this less shitty? I don't know.
Totally.
Really, that's just a better way to put it. I did have a question, though. A question a while back when we were talking about AutoZone. Do you function in both the brick and mortar and the online space?
Absolutely. Yeah, we're live. It's Advanced Auto Parts, but we're live in 4,000 brick and mortar locations for them. Now, it's not as fast as our e-commerce integrations as you might expect. So like with Shopify merchants, like we've gotten Shopify merchants live in hours, literally hours. I have a team of 10 to 15 Shopify engineers. They just go do the integrations for these merchants. So it's super fast. There's zero cost at all to use our solution, and then zero development resources that they need to allocate to it. For enterprise brands online, it can take up to 30 days in some cases because of custom integrations using our APIs, et cetera. For in-store, it's a totally different setup process, right? They have a POS system that's typically not linked to any sort of e-commerce system. There's a SKU setup. And then there's the biggest lift, which is the operational setup. So we actually go out, we have a field services team that goes out and trains district and regional managers or store managers on how to best market and merchandise protection plans through the purchase funnel, which can be different if you're a mattress salesperson, right, at a mattress store versus you work at a big department store where there's not one rep coming up to every customer that walks into the store because there's hundreds of customers and you can't allocate that way. So for different retail environments, there's different operational and training setups that we provide, but we absolutely play in those spaces because, the reality is when these programs are done well in store, they perform even better than online. It's a human in the loop. It's a consultative and assisted sales process where someone can really speak to the benefits of why someone would buy these. And you get to look at someone face to face and in the eyes, right? And then purchase from them. It's a good salesperson in any equation. So we see a lot of value in the in-store programs. We definitely are more weighted to the online ecosystem, especially during COVID. There was no point focusing on in-store. In-store, we feel, is back in a big way. And so we are, we work with a number of different partners that have in-store environments today, and we'll be getting them live over the coming months.
And you guys,
that's exciting.
Yeah, you clearly have the capacity to work with like huge businesses. Is there a certain like size of company? Like, let's take it to the Shopify store perspective. Is there a certain number of like SKUs that works best for you, or annual revenue, or is there like who fits best?
Yeah, I mean, we work across the gamut. I mean, and like I said, I meant it when I said I have a ton of respect for every entrepreneur. So we have Shopify merchants that are selling $10,000 worth of goods on the platform, right? I mean, small as a starting point. Hopefully they grow and become a lot bigger, and would be great for us if they do. But we serve them at $10,000 in sales regardless. We have merchants all the way up to Advanced Auto Parts, I think, does $12 billion in sales. So huge merchants with brick and mortar and online presences. We have some merchants that sell effectively one product, right? One SKU, and it's super simple to get up and running. You have other merchants that have 15 million SKUs in other cases, right? Like Advanced Auto Parts, Backcountry, who are partners of ours, have tons and tons of SKUs. So, complexity is, I think, the coolest thing out there, because if you can solve it, you have a real whatever the saying is, something to stand on, right? So we've tried to work through those complexities for merchants and automate them on our back end so that they don't have to deal with that complexity, and it's black boxed for them so that they can continue running their businesses. So it's really, do they sell a product where you can sell an extended warranty on it, is the question that we ask. And if the answer is yes, then let's go serve them, sort of the approach that we take.
And I know we're coming up the top of the hour. Lisa, I already see your lips starting to say those words.
No, I had another question, but go ahead.
I'm sorry. I was just going to ask, in regards to sales, is it something where you only service warranties to B2C, or do you also work in that B2B space?
Yeah, so we have we have companies that sell both consumer and commercial. So we can service both. There are different types of policies that are attached to each of them. Commercial use is more frequent usage than consumer use, is sort of the broad strokes assumption. So the pricing is different, but we can serve both segments. Commercial is an area where we have programs live today. Again, like brick and mortar, it's not the majority of our business, but they're absolutely an area where we have merchants that sell both consumer and commercial, and we want to be able to support both those business lines for them.
Mm. And when a business is signing up to use Extend, what kind of information do they have to provide you? Like, obviously the product they're going to be selling and whatever their existing warranty includes and what they know goes wrong.
We don't even need that level of granularity. So we have like catch-all programs. Some people don't have the data to support telling us like what are existing claims looking like. Other folks do, which helps us in pricing the best program for them. As you can imagine, insurance carriers take as conservative of approach as they can. So the more data we can provide, the better rates we can then get. Once they sign a contract, we'll ingest their SKU list or their catalog, if you will, and map those to extended warranties. There's a bit of consultative work there to make sure that we're using the right programs, pricing them the right way, et cetera. It's I would say, business requirements that we gather from them to ensure we're putting together the best program for them. And then there's a technical integration, super fast on Shopify, Magento, Salesforce Commerce, BigCommerce, WooCommerce. Like, we work with all these platforms. And then for enterprise merchants that have their own custom web environment, we do a direct integration. But all of the tech tools are sort of at their fingertips. And we have, I think it's like a 55 or 60 person team around solution engineering. Those are engineers dedicated to getting merchants integrations live in a timely manner. And that's where we've won. That's the hardest problem we're solving in this space, is making integrations fast and easy for merchants. It's why we've been so successful and been able to raise the amount of money that we have. It's the proof points we have around getting programs live in the market, which our competitors haven't been able to do.
Oh my God. I would have loved, back in my background screening days, to have a team of 50 or 60 to get direct integrations up, because man, those were a pain.
You asked really nicely. They'll consult for you too. So.
Well, I'm sure, especially for those retailers that are, because I couldn't believe it, but I forgot exactly who I was talking to, but they were telling me some exorbitant amount of companies are still not online and they still mostly run brick and mortar. I couldn't believe it. But I imagine when they do start to go online, that is something that is probably top of mind for them.
It's a big focus. I mean, and you know, like I said, we're a very consultative sales group and team overall, and like have a bunch of different support functions just to ensure success of our programs. What we found is that people are coming to us, asking us, like, what do you guys think we should think about as we think about digital transformation? How do you guys think we should play from an e-commerce perspective? What platforms should we use from an e-commerce perspective? So it's fun being this conduit in the middle where they look at us as partners, true partners, because I'm not charging them annual or monthly fees recurring. The solution's free to use. All net new revenue on the back end from selling extended warranties. I don't make money till an extended warranty is sold. And I think people trust us. Merchants, you know, we talked about consumer trust, but merchant trust is just as important. And merchants really trust us as a result of that.
Well, you've definitely got something really unique and really exciting. So hats off to you and your team. I
appreciate it. And this has been one of the more fun podcasts I've ever done. So I appreciate you guys as well.
It's just a conversation.
I know, that's why I like it. Not like questions and whatnot. So I appreciate it.
Yeah. No, I mean, I think if I ever skipped over an extended warranty before, I definitely won't now. I'll be one of your lifetime customers. Hopefully your team hears this and they track all my data and they give me a good deal on the warranties. I buy them on everything. So
now you know a guy. I know a guy.
Awesome. And Rohan, if a company wants to get started using Extend, like how can they get a hold of you? Where can they learn more? Or even if they just have questions about what they heard today?
Yeah, we have an epic domain. So it's www.extend.com. There it is, popped up on the screen. Don't ask me how much that cost. And then you can sign up on our website. Honestly, my email is Rohan, ROHAN @extend.com. Feel free to email me and I'll put you in touch with the right folks on our team. We have an amazing sales group. We have an amazing solution engineering team, as I mentioned. An amazing success function. Like, these folks are there to support our merchants. And so, you know, if you're thinking about it, you're not sure, reach out. We can have a quick 15-minute phone call, and I think you'll find it pretty exciting what sort of value it can drive.
Fantastic. And as always, that website's going to be linked in the show notes and at the bottom of the YouTube video. If you guys liked what you heard today, please be sure to give us a like, comment, subscribe, share with your network, rate us 5 stars on Apple Podcasts, and go ahead and turn those on. Y'all, I've lost it. Turn on those automatic downloads so that you never miss a conversation with leaders in supply chain and e-commerce like Rohan. Rohan, thank you again for being here, dear. It was a joy.
Appreciate you both. Thanks so much. Enjoy the rest of your week.
Thank you. You too.
Thank you.